Welcome to Value Creation Live. I'm Darrell Amy, Value Creation Guide and Certified Exit Planning Advisor. And I'm so excited about our conversation today about 3 gaps that every business owner must close to secure their financial future. 3 gaps that every business owner must close to secure their financial future. Thanks for joining us today. And if you have comments and want to interact, feel free to engage in the comments section. I'm super excited about the content that we have to share. And as we get started, I want to let you know that hot off the press, we've got this brand new guide, a business owner's guide to maximize business valuation. You can grab a copy right now at book.valuecreationengines.com. And I'm going to walk you through in a concise step-by-step way how to maximize the value of your business. This is a guide that I think is going to be extremely helpful to business owners and their financial advisors. And I look forward to sharing this with you. Just go to book.valuecreationengines.com. I'd love to get a copy in your hands. 3 gaps every business owner must close to secure their financial future. These are gaps that are really, really critical for you to know. Why? Here's the reason. For most business owners, 80% of our wealth is tied up in our business. And that really brings the first gap that we want to talk about today. I'm going to take notes here on my whiteboard and just share that. The first gap is the wealth gap. That is the gap that you need to be aware of. And that's the gap, whether it's retirement or just simply financial freedom, your goal of being financially free for yourself and your family. There's a wealth gap. And let's say, for example, that your go number, your number is to be able to say, yeah, you know what, if I have investments that can bring in $500,000 a year, I know that if it's conservatively invested, let's do some simple math at 5%. That means I'm going to need 10 million to be able to retire or be financially free. Okay, that's great. 10 million. First question is, what's your personal financial situation right now? What's your personal wealth outside of your business? Things, real estate, savings. What's that personal wealth number? Let's say hypothetically it's $2 million in retirement, and maybe you got some real estate and different savings. Well, what's the gap between what you personally have saved and what your business needs to be worth for you to hit that freedom number of $10 million? That's your wealth gap. And of course, 10 million minus 2, that's an $8 million wealth gap. This is an extremely important number to know for several reasons. First of all, it's an important number to know just for your own planning. Look, we all built a business for a reason and a lot of different reasons, but someday, every business is going to sell. It may happen when somebody walks into your business and says, hey, I'm interested in buying it. That may start the process of bringing that business to market. It may happen on into your retirement years. You may want to hold on to that business for a long time. But the reality is, at some point, all of us are going to move on from this earth. And at that point, all of us will sell our business. So it's important to understand where we are right now and where the business would need to be worth for us to be free. And that's whether you're planning for retirement, whether you just want to be prepared if the market is favorable and there are people that want to buy into the business, or you simply just want to understand your financial situation. Knowing this wealth gap is very, very important. And it helps you understand what the business would need to be worth in order for you to get what you need. And in this case, once again, this example, someone had 2 million saved in personal wealth. They know that their go number is 500,000 in income off, say a conservative investment that might yield 5%. Very, very simplified example here. Of course, you want to talk with your financial advisor for your own personal plan, but in this case, you need 10 million after tax. Which then brings up the second question. And this is a question that every business owner should be able to answer. And that's, what's my value gap? What's the difference between what my business is currently worth and what it needs to be worth? So if I know that my wealth gap is $8 million, the difference between what I need for financial freedom or retirement and what I currently have. And let's say I know I've got to fill this value gap with my business. Well, what's the business worth? Great question. Interestingly, even though 80% of personal wealth for business owners is tied up in our businesses, staggering figure that nearly half, 48% of small and mid-sized business owners have never had their business formally valued. This is according to a 2022 survey by UBS Global Wealth. Similar data from the Mid-Market Business Institute finds that around 60% of businesses in the mid-market have not been valued recently. In that previous data, where 48% of small business owners have never valued their business, even among those who had valued their business, UBS Global Wealth research showed that fewer than 10% of them had their valuation updated in the last year. And this is a big concern because if you want to know your wealth gap, you need to know, what's my business worth right now? This is the value of the business. So let's say your business is worth on the market, I will say $4 million for this example. Then my value gap, simple math, if I need it to be worth 8 million for my freedom number, then my value gap is 4 million. I need 4 million more to be able to hit my goal. Now, why is this important? Well, first of all, you need to understand what the value of your business is. If you run a Fortune 500 company, or I'm sure all of us have investments of some sort in mutual funds or ETFs, or maybe in individual companies in the market, we can know the value of that mutual fund or that ETF or that stock instantly. Like, just log in, you can find that data instantly. Interestingly, the employees of those publicly traded companies are also aware of the value, and therefore they work to manage the company in a way and lead the company in a way to increase the value of the company. They're aware of where it is right now, and I guarantee you there's a goal for where they want it to be. Well, if you're an owner of a small mid-market business, the answer to this question is really important to you as well. Where is the business right now? What's it worth? And what do you need it to be? Hey, the business may have a lot more potential in this example than $10 million, but at least you know where you cross the threshold of going, okay, now we're good. And I know for most of us, we've got one goal, which is kind of this is my goal for being conservative. And many of you, like me, have a goal of abundance, of being able to funnel money generously into great causes and leave a legacy, not only for our families, but for the world. So you may say, hey, my wealth gap for just to fund my plan, here is 8 million. But my actual gap, my gap between what the minimum is I need and the type of generosity I'd like to have, maybe that's 50 million, whatever that is for you. Now, once again, once I know the wealth gap, I need to know my value gap. What's the difference between what my company is currently worth and what I need it to be worth? And this is an important piece of data for every business owner to know. And by the way, if you don't understand the valuation of your business, if you're on the wrong side of that statistic, you're one of the 90% of businesses that haven't had a valuation update in the last year. I challenge you, get it done. Make that a priority for the next quarter. Make it a priority to understand the value of your company. And you can go to valuecreationengines.com, click on Get Started, and learn about how a market valuation could not only help you understand the value of your company, but what it could be worth if it were performing at best in class in your industry. And based on that, an actionable plan to be able to get the value where you need it to be. And that really brings up the third gap that I want you to understand. We've talked about the wealth gap. What's the difference between your personal wealth and what you need your business to be worth in order for you to hit your goals personally? We've talked about the value gap. Okay, well, if you need your business to be worth 8 million after tax, then what do we need the value of the company to be worth? Well, it needs to be worth 8 million after all the dust settles. Okay, well, how do I know what my company could be worth? That brings up the third gap. And this is the profit gap. The profit gap. What's the difference between your company profit margins and the best in class companies in your industry? What's the difference between what your company is bringing to the bottom line right now and other companies in your industry are bringing to the bottom line? This begins to give you an idea of what the company could be worth. So let's say hypothetically, right now, your company is bringing 10% to the bottom line. And just to use simple math here, let's say you have a $10 million company. It's bringing 10% to the bottom line. Therefore, your net profit is $1 million. You begin to, during the valuation process, begin to understand that other companies in your industry are actually actually able to bring 20% to the bottom line. How do they do that? Well, they're run efficiently. They've got great systems. They've got a revenue growth engine in place. They've optimized their processes. They have a culture development engine in place that's created a culture of accountability and entrepreneurship. They have a strategic innovation engine. They are running on all cylinders. And by the way, if you want to learn about that model, once again, grab your copy of Business Owners Guide to Maximize Business Valuation. But the best in class companies in your industry, let's say they're performing at 20%. Okay, well, now this same company that's at 10 million in revenue, if your company were performing best in class, would be bringing 20% to the bottom line. 20% of 10 million is $2 million. We just doubled the value of the company by performance. But wait, there's more. Every company trades on a range of value. So let's say the range of value in your industry, and this is part of what we look up when we're doing the research to understand the value of your industry. Let's say it's 3x to 9x. I was working with a business yesterday in durable wholesale goods, and that was the range for their niche and their industry. Let's say that business right now, this business right here, we do the math and we figure out it's trading at 5x of EBITDA. We go, you know what? If that business was optimized and was bringing 20% to the bottom line, not only would it be generating twice the EBITDA, but maybe it might be trading at 7 times EBITDA because it's a much more attractive company to a buyer. In order to create that kind of margin, there would have to be efficiencies, systems, consistency, great leadership, all the things that make a business ready to sell and attractive to a buyer. So let's just do this simple math again. $1 million in EBITDA times 5. Well, that business would be worth $5 million. Over here, $2 million of EBITDA at 7 times EBITDA, $14 million. Now we understand the value gap. The difference between what a business is worth right now and what it could be worth if it were performing at best in class. And this gets super exciting because we're almost 3x difference in this example. And you go, well, is this a real world example? The answer is every industry is different. But yesterday I was working with a business and the multiples in their industry, we looked it up. It was like 3 point something to 9.4x. That business was trading at 5.5. It was bringing about 9% to the bottom line. And, hypothetically, that business, it could have been making 20, right? So every industry is different. The point here is when you understand what a business in your industry does at best in class, you begin to get a vision to go, hey, we can understand that there's a gap now between what my business is currently worth in this example here that we just sketched out, 5 million, and what it could be worth, 14 million. So that's a $9 million difference. And now we begin to understand the value gap. And what we begin to see when we understand the wealth gap, we know for our own personal life what the business needs to be worth for us to hit our financial freedom number, to possibly retire, or to empower generosity, which gets so exciting at that point. When we know the value gap, now we understand what the business is worth today, and what it would need to be worth for me to hit my wealth gap and fill that in. And the profit gap is where things get really exciting, because that's where we understand what the business is worth today, but what it actually could be worth if it were best in class. Now, if you think about this profit gap, this gets really exciting, because if you had a couple years to work on this business and you were proactive and say 3-4 years out from a planned exit, you began working on the business and saying, okay, what do we need to do to increase the profitability of this business? And then what do we need to do to make that business more ready to transfer to a new owner and more attractive? If we got all of those things in place, we might actually grow that revenue and the profit margin. And let's say that business, hypothetically, after a few years, it grows to 20 million in revenue. And now that business is bringing 20% to the bottom line. Just go on with this. That would be 4 million in profit. And if we're trading at that 7x, 4 times 7, that's $28 million in value. See why I get so excited about this? I get excited about this because being proactive and being smart about understanding your wealth gap, your value gap, and your profit gap can set you up to massively accelerate the value of your business. And that's what's so exciting to me, because what this enables is all kinds of great things. It enables family legacy, and it enables abundant generosity and massive impact. And right now, we need both in our world. We need family legacy, and we need to be able to fuel the organizations and solutions that are working on the toughest problems in our world. We can leave something behind for our family. We can also be a part of leaving a better world behind for everybody. And that's an exciting vision. And it all begins with understanding those 3 gaps. What's the difference between what your business is worth now and what it needs to be worth to fill your wealth gap? Number 1. Number 2, what's the difference between what your business is worth now, the value of your business, and what it needs to be worth to fill that wealth gap? So the first one, what's the difference between what you have saved and invested personally and what you need? That's how much your business needs to be worth. What's the difference between what your business is worth now and what it needs to be worth? Your value gap. And then, of course, the third is the profit gap. What's the difference between where your business is right now and what it could look like if it were performing at best in class? When we understand these 3 things, we really begin to see a picture of what we need to do with our business. And that mirrors our MPG proven process here at Value Creation Engines. With the MPG process, phase 1, we measure, we figure out and answer that question: what's the market value of your business? We do that using best practices and looking at comparable sales inside our database of recent business transactions, tens of thousands of transactions across every industry focused on yours. It lets you see real world examples of what businesses in your industry are selling for, multiples of earnings, multiples of revenue, all kinds of good stuff. Gives us a good idea what best in class profits look like. Once you measure the value of your business, the second is to create a plan. Knowing the value of your business is fantastic. What are you going to do about it? We need an actionable plan. And during the planning phase, we work with you and your leadership team to co-create a value creation plan to allow you to fill in the wealth gap and the value gap and the profit gap. And when you execute on that plan, the beautiful things that happens is not only do you increase the value of the business, you also increase the ability, competency, and focus of your leadership team to continue leading and managing towards value. And then it's time to take action. M, measure; P, plan; G, grow. Now it's time to take action in quarterly sprints to make sure that you're consistently accelerating the value of your business. And as you do that, quarter to quarter, you're going to find that your wealth gap is being closed. You might even set larger goals for your personal wealth and your giving. that your value gap in your business is closed. You're beginning to see your business from the mind, not just of an owner operator, but also the mind of a owner investor, somebody that you're looking at your business as an asset, as an engine to create wealth. And then third, by filling in the profit gap, not only does the business become more profitable, it also runs more effectively and more efficiently. It's set up to run like a well-oiled machine, to the point where by the time all this is done, you may go, well, I want to sell it. You go, man, I may just want to hold on to this because this business is running so well with less involvement from me. Either way is a massive win. So today I want to challenge you. Do you know your gaps? Can you tell me? Can you write down on a piece of paper? Have you had someone work with you on this? Do you know your wealth gap? Do you know the value gap, the difference between what your business is worth now and the minimum it needs to be worth for you to hit your goals? And do you know the profit gap? Do you know where your business is performing relative to other folks in your industry? Do you understand what best in class looks like so you can set some realistic goals and aim towards them? And if you don't know the answer to one or all of those three questions, I'd love to have a conversation with you and take a look, lift the hood on the business and begin to help you understand, work with you and begin to say, hey, what could this business be worth? What's it worth right now? And what would it take to get there? So if that sounds helpful to you, go to valuecreationengines.com, click on the Get Started button. Would welcome the opportunity to have a confidential conversation. But the main takeaway I want to give all of you from this business today is you need to know the value of your business. If you are a small mid-market business owner, chances are 80% of your personal wealth is tied up in your business. Knowing the value or estimating the value based on something you heard at an industry trade show or on the 17th tee box, not helpful in something this important. And so I'd be honored to have a conversation with you to talk about how you could understand the value of your business and how you could work to execute a plan to grow. Thank you for joining me today on Value Creation Live. And as we say, let's get going and let's get growing.
What's the true value of your business? For business owners of mid-market companies with $10 million to $100 million in revenue, this might be the most critical piece of data you can know. The answer to the question about the value of your business can vary widely based on how attractive your business is to potential buyers and how ready it is to transfer. At Value Creation Engines, we believe that increasing the value of your business is about more than just making money. It's about unlocking options. It's about creating the freedom to shape your future on your own terms. It's about harvesting assets to create a meaningful impact in your family and in the world. Knowing and growing the value of your business is not just about creating a successful sale or transition to the next generation. A business that has intentionally focused on value creation runs at peak performance, giving you the freedom to begin stepping back from day-to-day operations, freeing you to pursue new passions both inside and outside your company. Here's the challenge. Recent research by the Exit Planning Institute revealed that over 83% of businesses that start a sales process fail to complete the transaction. Only 17% of businesses that begin the process of selling are successful. For family-owned businesses planning for a generational transfer, the statistics are similar. Sadly, only 30% of generational transfers succeed. For the ones that do succeed in selling their business, 81% of them wish they had spent more time preparing. That's why smart business owners get on the front of this by creating a strategic exit plan as far as 5 to 7 years in advance, allowing them to accelerate company value as they prepare the company for a successful sale. At Value Creation Engines, we specialize in helping mid-market companies multiply their valuation so they can maximize their impact. Our proven frameworks, grounded in the principles from the Value Creation Engine, guide your journey to maximum value. Whether it's growing revenue, streamlining operations, building an entrepreneurial culture, or driving innovation, we're here to help. Our proven process begins by measuring your current business value through current industry multiple data and a thorough analysis of your business. Next, we collaborate with you, your financial advisor, and your leadership team to develop a value creation plan that aligns your personal and business goals. Then we help you execute 90-day sprints designed to improve your value creation engines so you can maximize enterprise value and reduce risk. Every 90 days, we'll review your progress, adjust the plan, and evaluate if it's time to sell or keep growing. It's time to take control of your business's future. Unlock the full potential of your company and create more options for your next chapter. Schedule your 90-minute enterprise value meeting now. Discover the top ways to accelerate value and get the answers you need to minimize your risks and maximize your valuation.